Conversation is with Equitas Small Finance Bank. Now, this company is on our radar as the Reserve Bank of India's approval has come through for the reappointment of the company's MD and CEO for a period of 3 years. We actually have with us Mr. Vasudevan, MD and CEO of Equitas Small Finance Bank. Thanks very much, sir, for joining in. First things first, I just want to, get this out of the way because last year there was that time, I think, in the middle of last year when you had expressed your desire to move away and look at, some other personal businesses. But then you came back, you expressed your intent in December, saying that you want to continue, and the RBI's approval has now come through. So will you be at the helm of affairs for the full period of 3 years now?
Yeah, hi, good morning. So yes, last year, we did make an announcement that I wanted to step down and, focus on some other philanthropic and other activities. But later, we had a lot of dialogue with the chairman and the board, and we decided that I will continue in the bank and manage the other activities in a different way. And that is why we had applied to RBI for a fresh 3 year, because last year, instead of 3 year extension, we had only sought a 1 year extension because I was thinking that I might be stepping down. So that 1 year extension expires in July 23rd of this year. But since we had reversed the decision in December, so we had applied to RBI for a 3 year extension. And, yesterday we got this approval from RBI, agreeing to that 3 year extension effective 23rd of July of this year for a further period of 3 years. And as per RBI guidelines, a person is allowed to be the MD of a bank for a period of 15 years. I have already completed around 6.5 years in the bank, which leaves me around 8 year plus tenure left out of that 15 year. So out of which the 3 year approval has come just now. And subject to God's grace and subject to RBI approval, I should be here for the remaining 8 year plus in the bank.
Okay, so you're putting that on record that you intend to stay on for your entire tenure. The RBI approval for the first 3 years is in. So at least 3 years, we are assured that you will be, of course, the man in charge. Got that, Mr. Vasudevan. So with that context, now let's talk about, the trajectory ahead for the bank. I think at the end of the fourth quarter earnings, you had told us that you're looking at a growth of 25 to 30% every year. I mean, a CAGR in terms of business growth. So now tell us, what will the driving factors be in terms of segments, businesses? You also at that time, on the 8th of May, I remember that interview, you also said that you look at getting into some newer areas, which may be slightly margin dilutive, but it's all about growth, at least for the time being. So give us some more detail on this growth roadmap then.
Yeah, so on the lending side, we have a very large platform of different products. 90% of our current lending is addressing the informal economy borrowers. We have 38% of our loans, which are loans for small business people, which is secured against their house property. 25% is vehicle finance, commercial and cars put together. And 18% is microfinance, 10% is affordable housing finance, and the remaining is MSE financing. So if you see, we have a broad, spectrum of products on which the whole advances portfolio is built up. And 90% of that, as I mentioned, is addressing the informal economy. And as per various government data, the unmet demand in each of the segments that we operate in, the unmet demand continues to remain quite high, which means that from a demand perspective, there is really no dearth in terms of opportunity to grow. And then the entire challenge is really more of internal to ensure that we manage the portfolio properly and be able to sustainably grow the portfolio. So the guidance we had given that stands that we should be looking for a 25 to 30% kind of a growth for the current year, and going forward for the next few years, we should be able to sustain that, provided we continue to focus and remain very strong in our portfolio quality. In terms of new products that you had asked for, yes, we will be launching 2 new products, which will be the personal loan sometime during the current year and the credit card sometime during the next financial year. And of course, they will take some time to build up in terms of scale, but these are the 2 things that we will launch. So over a 3 to 4 year time frame, we should see our names coming down as some of these new products kick in. and some of the existing products we keep adding more variants into the existing products, which might come at a lower rate.
Mr. Vasudevan, just a question. Since you're getting into credit cards and you're getting into personal loans, I mean, and this has been the big impetus for, banks across the board, right? Unsecured lending. This is also the area, of course, yields are much higher over here, but it's also the area where a lot of analysts are sort of beginning to wonder whether we could be setting ourselves up for a bit of an asset quality issue a few years down the line. So just in terms of managing credit costs, your buffers, the capital ratios, how do you look at the unsecured space, which is where you will get more aggressive now?
So we are not exactly going to get more aggressive. It's just that, we are going to launch these 2 new products, and of course they will be launched over the next one year, 1.5 years time frame. And, our current book, 18% is unsecured, which is microfinance. All our rest of the book is secured. In a 3 to 4 year or a 5 year time frame, when we have 2 more new unsecured products, which is personal loan and credit card, we will still be looking to manage our overall unsecured book within that 18 to 20% level, so that the remaining 80% should continue to remain as a secured book. So we'll be managing and toggling the percentage of contribution of all the 3 unsecured products, microfinance, personal loan, and credit card, such a way that on a combination basis, they don't really exceed the current level of 18-20%. So that's how we plan to manage that.
Okay, got that. Mr. Vasudevan, thanks a lot for joining us. You did mention that the NIM could come down a little bit. I know you've said that before as well, as you do start to add new products. Can you, take us through how much are you factoring in just the current financial year, because you are looking to launch these products in the second half. So can you tell us how much of a contraction first you're expecting on this front?
See, over a 3-year period, our current NIM is about 9%. Over a 3-year period, I guess it could come down to anywhere between 8.5 to 8.25. In the current financial year, the new products are not going to be a contributor for NIM reduction, because they will be very marginal by the end of the year. So they are not going to be having any impact on the NIM. But current year NIM could actually be impacted more from the interest rate going up. Last 2-3 quarters, we have been seeing an interest rate rise. And even though the RBI pause has happened and we are not seeing a systemic increase in rates now, but our old deposits are getting repriced with new deposits at a higher rates. So for another 2 quarters, our own cost of funds should go up, and that could impact NIM to some extent. We will be trying to manage that through both in terms of fee income as well as operating expense leveraging, so that we try to hold the PPOP, that's that pre-provision operating profit, PPOP around the 3.5% level. So while NIM this year also we expect 9% to come down marginally, but at the PPOP level we should still be trying to hold it at around the 3.5% level.
Okay. The desire to be a universal bank, Mr. Vasudevan, just a final word on that, on the universal banking license, and what do you see ahead?
Yeah, I mean, that's an aspiration that we have, definitely. So we will be, we are in touch with the regulators. As and when the window for us opens for us to apply, we will, make our application, and then of course we'll have to see whether we are qualified, and then what happens to our application is something we'll have to see. But as and when the window is open and we become eligible to apply, we will definitely seek to apply.
Okay, all right, Mr. Vasudevan, good chatting with you today. Thank you very much for joining in. We'll take a